Hello everyone. So welcome to the next video in the series of videos on financial accounting. Now in the previous video on this list you had seen what is called as a tabular analysis. So if you see tabular analysis which we discussed in the previous, it looks something like this. So we write assets on one side and liabilities and shareholders equity on other side, and in a big tabular form we do this analysis. But this is not convenient when you are dealing with the actual accounts. So in order to make it convenient, instead of a big table like this which fills 2 pages, so we do what is called as a journalization or journaling. Okay, so we enter the transactions in the form of a journal. Okay, so here for example this is a question. So there are again similarly different transactions are given. You can do tabular analysis for this, but instead of doing tabular analysis for this, we will be doing what is called as a journalizing the transactions. Now, before doing the journalizing of transactions, we need to understand certain background. So let me just quickly explain that. Okay. So there are different types of accounts, right? So what you learn here or what you remember here is dealer. So this is three different types of accounts. Okay, so DEA means either dividends or expenses and or assets. So either it's a dividend or it is an expense or it is an asset. Okay, so these three accounts are called normal debit accounts. So these are normal debit accounts, whereas normal credit accounts are the above. So what are normal? L means liabilities, E is equity, and R is revenue. So whenever there are liabilities, equity or revenue, you show them as a normal credit account. So what do you mean by debit account and credit account? So here debit means increase, or in other words increase is represented as debit. So increase is represented as debit. Here increase is represented as credit. So if you don't understand what this is, just wait for time when I solve the problem. So here credit means increase. Okay, so this is what we need to remember. Dealer, from dealer we get dividends, expense and assets, and for LER you get liabilities, equity and revenue. So these are normal credit account. That means increase means credit. Here increase means debit in the case of this accounts. Okay, so now with this background, so even if you did not understand, don't worry, you will be able to, based on this you will be able to do the journal entries. So let us do that now. So what is given here is a particular company, so Adventures Travel Agency. Okay, so let's write that here. Adventures Travel Agency. Okay. So for this I am making journal entries, right? General journal. Okay, so it is journal entries are called general journal, and we write J1 as a first page. Okay, so that's just a common practice. So here I will say problem E 2.9. Okay, so now what is the structure of this? So again there will be date, there will be account, explanation, then there will be reference, then there will be debit and credit. Okay, so let me draw the lines for this. So this is the standard format of making journal entries. Okay, so now right now forget about reference. We will only worry about this date, explanation, debit and credit. Okay, so let's do the first one. Okay. Shareholders invested 24,000 in business in exchange for ordinary shares. Okay, so when the shareholders are investing, obviously cash will increase. Okay, right? Cash will increase because 24,000. That's what you did in the tabular analysis. Now, what is the cash? So cash comes under the assets. So asset is increasing means we have to put cash under debit. Okay, so that is what I have to do here. First, cash is under debit. So cash and debit amount is 24,000. So this is on the first, okay, 1st of April. Now, because cash is under debit, something else should be in the credit. Okay, so but look at this, shareholders invested. So when shareholders are investing, then this will go into the equity. Okay, so if you go back here, equity is on the right side, and equity is also increasing. So normal credit is, this is a normal credit account. Increase represents the credit. So very good, it is matching with our requirement. So simply I can say common stock, and I will say 24,000 credit. So common stock increasing means credit, cash increasing means debit, because cash is an asset and common stock is a equity. So here you can write shareholders invested, some kind of explanation. Investment. Okay, so I'm just to save the place, I'm not writing it in detail. Now let's do the second transaction. Obtained a bank loan for 7,000 by issuing notes payable. Okay, so when you obtain a bank loan, obviously bank is giving you $7,000. That means your cash is increasing. So again, it's exactly the same. Cash is debited by 7,000, because increasing means debit, because cash is an asset. Now on the other hand, what is the, here it is mentioned notes payable. Okay, so note payable is a liability. So again you see, if it is a liability, increasing represents the credit side. Okay, so therefore here I can say notes payable and 7,000. Okay. So that is the second transaction. Paid 11,000 cash to buy equipment. Okay, so now cash is an asset, equipment is also an asset, but cash is increasing, equipment is also increasing. So I'm sorry, cash is decreasing because you paid the cash. So when you pay the cash, your cash will decrease, whereas equipment is an asset. So therefore equipment will be in the debit and cash will be in the credit. Okay, so because cash is an asset, increase means debit, decrease means credit. So okay, so now let's do that. So when you're buying an equipment, your equipment account will increase. Okay, so this is on third. Here equipment will come first. Equipment will increase by 11,000 and cash will credit by 11,000. So that means cash is decreasing. Okay, so here cash is increasing, here cash is decreasing. That's what you should note. That is about the third one. Let's do the fourth one. Paid 1,200 cash for rent. Okay, so what is rent? Rent is an expense. So if you go back here, you see expenses are here. So rent expenses increasing means debit. Okay, so here I have to make an account called rent expense. So rent expense is the name of the account on which I am recording all the rents paid. Okay, so this is 1,200. Okay, so this is under debit. Now something should be under credit, and in this case, because you are paying the rent, cash will become credit again. Okay, that means cash will reduce. Okay, so that is 4. Next, fifth one, let's do. Paid 1,450 for supplies. Okay, so again, supplies is an asset, and when you are purchasing supplies, your asset will increase. So therefore, supplies will be in the debit, and you are paying the cash, so cash will be in the credit. Okay, so let's do that. So supplies will be 1450 and cash will be 1450 credit. So we'll have, it's a double entry system. So one will be debit and other will be the credit. Okay. So that is the fifth one. Now sixth one. Purchase $600 of advertising in Daily Herald on account. Okay, so this on account is important. Anyway, so your advertising is an expense. So your expense is increasing. That means expense should be in the debit. Okay, so if you see, again refer to this, expenses are increasing. That means expense will be in the debit. Okay, so here I will write on sixth advertising expense. So what is the advertising expense? $600. Now here this expense is on account. Now on account means it is your liability. Okay, so the liability, see, liability increasing means again credit. Okay, so here accounts payable, this will become 600. Okay, so now you see the benefit here. Easily you can write in a series of entries, rather than writing it like this in a tabular form. It is very difficult, whereas this one is easy to write. Okay, so one debit and one credit. Okay, that is about sixth one. So seventh one, performed services for 18,000 cash, of which services for 18,000, cash of 2,000 was received and balance 16 was billed to customers on account. Okay, so this is a complex transaction where three entries are needed. So first of all, you are performing services. So when you perform services, what happens? You are earning revenue, right? So your revenue, but then if you see, revenue is normal credit account. So increase represents a credit. So therefore, I know that this 18,000 will go in the credit as a revenue. Now, but on the debit side, cash will increase by only 2,000. So first let's record that. Cash increased by 2,000. Now there is another on account. Okay, so the customer is going to pay. So that is called accounts receivable. So notice that I am starting at the exact same level of this. Okay, so because both are debit entries. Accounts receivable. So here accounts receivable will be 16,000. So 2,000 debit in cash, all right, and 16,000 debit in accounts receivable. To balance these two, the credit will be service revenue, 18,000, like this. So this is about this transaction. So this has normally every transaction has only two entries, but here we have three entries, but the total debits equal to total credit, so that is anyway matching. Next one, declared and paid cash dividend of $400. Okay, so when you pay cash, your cash will be reducing. Okay, so I will right away write here in the next line, cash is credited by $400, and obviously dividends will be debited by $400. So again you see dividends increasing. So dividend is under normal debit account. So increasing represents debit. Okay? So therefore dividend increasing by 400, cash is decreasing by 400. That way you can read it. Okay, so that is the eighth entry. So 9, 10, 11, 12, 13. So we have more. So now it's okay. We'll make another column. So let's come to, or here itself I'll make another column. So again same thing, general journal. Let's call this as J2. So second page in the journal, and then date, account, explanation, reference, debit and credit. Okay, so let me draw the lines. Okay. Okay, let's do the next one. So the ninth one, paid the utility bill for the month 2000. Okay, so utility bill you are paying. So obviously it is a expense. So utility expense and paid in cash, right? So, and the utility expense will be debited by 2000 and cash will be credited by 2000. So why cash is crediting 2000? Because you are paying, cash is decreasing, so it is under credit, and expense is under debit. So if you go here, again you can see expenses increasing, means it is a normal debit account. So that is why expenses are increased. Okay, so next, 10th one. Paid daily herald the amount due in transaction number 6. Okay, so what is transaction number 6? Here you see advance advertisement expense 600 was accounts payable. Now you paid them. So when you pay accounts payable, that means accounts payable will decrease, but it's a liability, right? So accounts payable is a liability. Decreasing means it has to come in the debit side, because increasing is coming in the credit side. So decreasing will come in the credit side. So that is what happens here. Accounts payable will be the amount in the transaction 6 was 600. That 600 will be here, and obviously cash will be crediting by 600 because you paid with cash. Okay, that is about 10. Paid $40 of interest on the bank loan obtained in transaction 2. Okay, so this is again interest expense. Okay, so interest expense 40 and cash credits by 40. That is 11. Paid employees salaries and wages 6,400. So again this is an expense. So expenses are easy. So salaries and wages expense, EXP expense 6,400. So salaries and wages expense will be in the debit, and then cash will be in the credit 6,400. Finally, received 12,000 cash from customers billed in transaction 7. Okay, so in transaction 7 there is a accounts receivable of 16,000. This 16,000, now you have received some amount. So when you receive 12,000 cash, so obviously the cash will increase by 12,000. And on the credit side, you have accounts receivable credited by 12,000. So that is this one. Okay. So that's it. Journalizing of transactions is completed. So what you see on your screen is the journalization of this transactions of Adventures Travel Agency, and this is how you journalize the transactions. Now what is the benefit of journalizing these transactions? You can find the balance in the accounts easily. So for example, if I want to know what is the cash balance, okay, although this is not asked in the question, but still I will do it. Okay, so how to find the total balance in the account? Okay, so let me erase these lines. So let's end this here. So you can always add the total debits and total credits you can find, but that number doesn't have any meaning. That's just to check it. But now let's do a T account. Okay, so cash. So you do one vertical line, and then you write the date, debit, date, and credit. Okay, so I'll draw a thinner line here. So mainly this is the main partition, two sides. Okay, so look at the first one. So here cash debit 24. Okay, so this I am considering like this. Now come down again, cash debit 7,000. Okay, so again this is on second. Now come down on third, cash credit is 11,000. Okay, so on third, cash credit is 11,000. So next you see fourth, cash credit is 1,200. Okay, so this I have done, this I will do, that is fourth, 1,200. Next on seventh, cash debit is 2,000. Okay, so seventh, 2,000 is a cash debit. Next come down, so this one is considered. Next 400 cash credit, okay, on 8. So whether it is on debit side or credit side, I can record it here. This is a simple T account. Next one you see here, cash is on the credit side 2000. Okay, so this is 9th, 2000 on the credit side. So this is done. Next cash is on the credit side 600. Okay, so 10th 600. Next cash is again on the credit side. Okay, so that is on 11th 40. Then cash is again on the credit side 6400. So and finally here cash is on the debit side 12,000. So here that is on 13 12,000. So now how to find the balance? Okay, so let's do the total. So balance. So total debits, let's calculate. So 24,000 plus 7,000 plus 2,000 plus 12,000. So 45,000 is the total debits in the cash. That means cash has increased by 45,000, whereas cash has decreased also. So that is 11,000 plus 1,200 plus 400 plus 2,000 plus 600 plus 40 plus 6,400. So 21,640. Okay. So now debit side is this much, credit side is this much. So final balance, net balance is debit minus credit. Okay. So sometimes credit will be more. In that case, credit minus debit you will do and then show it as a credit balance. Okay. So here you can make it 0 and then 45,000 minus 21,640. So this will be $23,360. So this will be your closing balance of the cash account. Okay. So that is the reason by doing these journal entries and by doing this T account, we will be able to find the closing balance of any account. Okay. We will see more examples on this later. But right now the problem was asking what is the journal entries. We did the journal entries. In addition, we also did the T account for the cash. If you do T account for all the other accounts, then it becomes a general ledger, and after general ledger finally you will do the trial balance. Anyway, we will be doing all that in the further videos. Thanks for watching this. If you like these videos, please share and subscribe to my channel and refer this to your friends. Thank you so much.